how we can make use of the fundamental knowledge and technicals knowledge. The reason we are discussing now this particular concept is right now, if you look at the Indian stock market, considering that majority of the scenarios are decent, but yes, as we are very closer to the elections, right, the Lok Sabha elections, till that we will have certain volatility, right? And even after a clear majority or after a government which has been formed, then we will be getting more big players entering the market. Big players means your institutional investors, namely FII, foreign institutional investors, right? So after the government or what is the direction of the political scenario in India, then FIIs will be pumping more into the prospective sectors. And sir, how do we say that the volatility is increasing in stock market? One of the factor which we can look at is India VIX, right? India VIX. VIX stands for volatility index. And how do you check that? We use trading view for that, right? So let me open up trading view and let's look what's happening with India VIX, right? So if you open up your trading view, like how you search your stock or index, you just need to search for India VIX, right? India VIX. So this is the thing. And now, yes, in the last couple of days, right? In the last couple of days, even yesterday, we have seen almost a 13% increase in VIX. So we are at right now 16.6 levels, right? 16.6 levels. So whenever your VIX is between 16 to 18, right? It's little bit rough patch. And anything above 18 VIX levels, that is not a perfect pitch for you to bat. Yes. So even if we go back, right? If we go back in the past, during COVID time, we have seen the volatility index increasing and it has even touched almost like 70 levels, right? 70 levels. When there is VIX increasing, there would be more volatility that would be developing, right? Developing. So, sir, is it like very a panic kind of a scenario? No, it's not a panic scenario, but just that we will be little bit more careful in our positions, right? In our positions. So this India VIX increasing, we should not be attempting to pay more on short-term swing trading like that. We'll be just be careful, and any positions which are already profitable, and when we see a reversal in them, then we do profit booking, right? Then we do profit booking. So what we will do, let's deep dive on why we need to understand both a fundamental lens as well as a technical lens and how we can take benefit of both of them. And recently, your January, February, March 2024 quarterly results were out for majority of the companies, right? Your Q4 results were out for majority of the companies. So when we know what are the parameters to check fundamentally, even though there is a slight decline in the market, those companies which have given good results quarterly or fundamentally strong companies should be the watch list companies. When the market retreats back, those are the companies which can be multi-baggers, right? So yes, so the companies which are fundamentally stronger, quarterly performance is good. And when the next bull run starts, these are the companies first to push up. So let's look at what are those fundamental aspects we will take into factor to analyze that strength. First, fundamentals will tell you what to buy, and it will also tell you the valuations of the company, right? Valuations of the company. And for all the fundamental investors, it's very important for you to learn technicals also. Why? The reason being, by learning technicals, you will be able to filter down the stocks, right? You will not have entry into any random company. You will be able to filter down the stocks. Second, technicals or charts reading will give you stock exits, when to exit, or even any stock which is showing decline or which is showing weakness based on technicals, that gives the first signal for you to exit. Third, stage analysis. What do you mean by stage analysis? Let's say this is the entire life cycle of a company, right? This is the entire life cycle of a company. So the starting stage where the research will be happening, research and development, R&D. If you look at pharma companies, right, in the initial stage where the R&D activities are happening, that is called as stage one, very initial stage. You don't get huge numbers there, huge profits there. It is where the company is just starting out, stage one. Stage two, this is the stage where the actual growth happens, right? The company will be moving in a very good growth stage. This is stage two, and we would love to be in this kind of a stage. Stage three, this is the stage where the stock does not move anywhere. It will not give you profits or it will not give you losses. It is a base consolidation phase, right? This is stage three. And stage four, the stage which we need to avoid, declining phase, right? Whenever the stock is falling, do not average down or do not try to catch a falling knife, right? We will not love to be in the stage four. We will love to be in stage two. This is where money is made. And yes, on a chart, when you see, you will be able to understand in which stage is the company in. So if you're a fundamental investor, yes, you need to learn technicals to filter down the stocks, to know when to exit the stock, and to do stage analysis. Now, based on technicals, sir, I'm a technical analyst or I'm doing well in technicals. Yes, you will know when to buy and when to exit, right? When to buy and when to exit. And yes, in technicals, we check the relative strength of a company, right? Relative strength of a company. When the relative strength of the stock is strong with respect to the benchmark, and it is also coupled with good fundamentals, those are the companies will lead to multi-baggers. So even right now, any company which is relatively stronger than its benchmark means Nifty in the last 1 month gave 5% returns. Any stock which has given more than Nifty returns in the last 1 month, those are like RS positive stocks. And RS as an indicator when you're applying, we use daily where we check 123 days time frame and the stock is RS positive than Nifty. Those are stronger companies. And those companies where the last couple of quarters, 2-3 quarters, fundamentals are also very good, then that's a golden combination that will lead to multi-bagger returns. Second, as we have discussed now about the stage analysis, you will be able to know being a technical analyst. Price and volume strength. Sir, there is a company where it has fudged the data of its latest quarterly report, or the audit data is fudged, or the kind of a sales what the company is doing is fudged. Yes, anything on the annual report, they can do any kind of a malfunctions. But volume, which comes to you on a chart, right? Like let's say if this is a chart, and if you see this as the stock price movement, you get volumes below your chart. These volumes, no one can hide or no one can manipulate that, right? No one can manipulate that. So that's the power of technical analysis where you can combine price and volume strength. And lastly, yes, trend analysis you will be able to identify. Sir, I've been investing into certain companies where it is in a downtrend for a very long period, right? Or it is in a side trend where it is not moving anywhere, or it is an uptrend, it is consistently moving high, right? So this trend analysis you will be able to do by being a technical analyst. And why a technical analyst need to learn fundamentals is, yes, quarterly data tracking. For example, one of the solid example, if you see Titan Limited, yes, Titan as a stock has been a long-term company, and even which is a part of Mr. Late Rakesh Jhunjhunwala's portfolio, has delivered extraordinary returns in the last couple of years, or even in the last decade. It has done extraordinarily well. It has done. But right now, if you are planning to add more, one observation, if you see the latest quarterly data, if you check in Screener, right? You just open screener.in, you just enter Titan Limited, and the Q4 number of 2024 versus Q4 numbers of 2023, it's a mixed numbers. It's not too aggressive, and it did not meet the expectations of the analysts. That is why slowly it is becoming weaker, right? That is why it's slowly becoming weaker. So the person who is able to learn fundamentals apart from being a technical analyst, just by going to the website Screener, Screener, right? Screener.in, you'll be able to track quarterly data, and this data will give you more conviction to increase position. Sir, yes, I'm already in a company, I've made 40% returns, and the stock is still going up. Fundamentally, quarterly data was wonderful. So that's a more conviction for you to add more. Sir, I'm already having it. I'm in the stock for last 5 years or last 3 years. I'm at a 30% returns. This quarter, not so good numbers, right? Or it is flat number. So you do not add right now, because when a stock quarterly data is not very strong, if it is a long-term company, just based on one quarter, you don't take any decisions. Sir, this is a very stable company, fundamentally strong, but yes, one quarter it did not perform well. It's okay. You don't add until unless it's falling heavily, you exit, else you just hold. You observe the next quarter. If the next quarter, if it is picking up, you again add. So you get conviction on your positions based on the numbers rather than taking any suggestions. Second, you can understand the business in detail. Now, sir, I wanted to learn about what's the problem in Titan. You open up Screener, go to the latest quarterly report or the con call report. There are PDFs in Screener. You download that PDF and you search for margins. How did the margins improve? How did the growth in sales, net profit improve, right? For example, Kotak Mahindra Bank. Yes, in the last 15 days, it had problems because of regulatory issues. It has problem of the MD, joint managing director resigning, right? So multiple things, it has crashed. But yesterday, numbers which has come were little decent numbers, right? Or even good numbers. So that's why the stock has moved up 5% up yesterday. So we will check whether this is a long-term growth perspective or it's just one quarter number. So what do? You go to that report in Screener, you download that PDF. It's wonderful to read the entire PDF of 8 pages or 10 pages. If you do not have time, just search for margins. How are the margins increasing from year on year, quarter on quarter? Sales, net profit, is there growth or not? Earnings per share. Is there any capital infusion that is happening, right? Rainbow children. Yes, in the healthcare space, the hospital space, doing wonderfully well. Polymedicure, doing wonderfully well, right? So yes, is there any capital infusion that the company has had into developing more? We check. Amalgamation, is the company amalgamating into with another business? Or capex, is there any capital expenditure that is happening? Mainly hospitals, already existing unit is there. They develop one more gynecology unit. They develop one more pediatrician unit, right? So when the existing unit is there and the new unit is being constructed and the money is going there, that is called as capital expenditure. Existing unit, another unit they are pumping money, that is called as brownfield project or brownfield capex. If something is starting from the initial levels, that is called as greenfield project or greenfield capital expenditure, right? You look at export business. How is the exports of the company, right? If a company where you see, let's say a shrimps business, right? Shrimp, like Avanti Feeds, Water Base Limited, something like that. If they give in their report that 80% of the company is dependent on export business, then we also look at Where are the manufacturing units? Is this closer to the port or not? So that's a add-on for the company, right? And yes, if you are referring to an annual report, you can search for MDA, Management Discussion and Analysis. That is where you get to know what is the perspective of the MD over a longer period of time. You get it in annual report, management discussion and analysis, right? And analysis. Third, fundamentally strong company during market downfall. Yes, right now, if the market is little weak, any company which is holding stronger and quarterly wise also they have given some extraordinary return, these are the companies which we will invest once the market uptrend starts. And lastly, avoiding red flags. Yes, by following the fundamentals, if there is a decline in sales or if there is a decline in growth of the company quarter on quarter, that is a red flag for you to either reduce your position. Yes. For example, sir, I am there in a company from almost 4 years in a specific company. Going well, I've made like a 2x, 200%, 300% return. But in the last 2, 3 quarters, the sales is coming down. Margins are also coming down. So that's a red flag for you to either reduce your position or book your profits and move into another segment, right? That's the power of technical analysis. Now, let's look at what are the benefits by combining both fundamentals and the technicals together, right? Fundamentals and technicals together. First, any company, the first information which comes about the key matters of the company is insiders. Maybe the top management, someone who is following the company too closely, they get the information. But yes, as a technical analyst or as a person who read the charts, if there is a sudden spurt in volume for a stock, yes, the stock has increased by 5% and the volume has suddenly burst, and that's happening for 2, 3 days, means there are very big players who are accumulating. Let me repeat. Let's say this is the chart, a stock, let's say X Private Limited, you are analyzing the stock. 3 days before, the stock price has increased and volumes have come very strong. 2 days before, again the stock has opened up 5% more. Again, the volume has increased. Again, the stock has increased price. The volume has been increasing, right? So when you see a consecutive increase of volume and a price, which means someone, big players are accumulating the stock. They are buying more in volume. So you get to know that someone is accumulating. So something is happening in the stock which is very strong. So you can participate in that momentum. That's called as swing trading or momentum investing, right? And institutions get the data fast, and news agencies, because there are certain companies, right? Certain analysts who closely track the company, right? And the most saddening part is any company, right? Any of the data which you are observing, when a key data is announced or when a key data is about to come, insiders get to know the information very first. Later, institutions get the data. News agencies will be knowing, and it will also be announced in quarterly results, con calls, or even AGMs, right? Retail investors will be the last. Yes. So, sir, I've been invested in a stock for 4 years. I've made some 200, 300% returns. In the last 2, 3 quarters, sales, margins, it's a continuous decline, right? Even net profit wise, earnings per share is a continuous decline. I'm able to see it in screener itself, right? Quarter on quarter, it's a decline. So if you are quick enough to combine the fundamentals part of it and technically also, if it is becoming weak, you should exit or you should reduce your position, right? So these people, insiders or even institutions, news agencies will be knowing this data and they'll be exiting much faster. After that is announced, and when you're able to see in screener, by that time, when you're the last player, the entire damage would be happened. That's why we need to have a combined lens to look at companies both fundamentally and technically to take the advantage of succeeding in the market, right? Succeeding in the market. So even if you're a fundamental investor, learn the charts, technicals part of it. Technical investors learn the fundamental part. So you should become a techno fundamentalist, right? Techno fundamentalist. That's how you take advantage in the market. And everything is a learnable skill. Just that we need to keep our focus and just learn every day by 1%. If you're just growing yourself 1% better than the previous day, that's where not only money compounds, your knowledge also will compound in a similar manner. Okay.